Are Kiwi people finally waking up to the fact that business could be the #1 asset class in New Zealand? But I'm not here to convince you. All you have to do is check the rich list to know that the answer is yes, because most of the people on there have built their wealth through business. Of course, some of them will stack it into property, but for many of us, we grow up believing that property is the best and sometimes the only way to build wealth in this country. However, business has many, many distinct advantages, and I think a lot of younger people are looking at this vehicle to wealth and deciding, yeah, you know what? That's where I'm going to put my time, and I'm going to have a good crack at that. Now, historically in New Zealand, you do very well financially if you got a good education, a good job, bought a property, watch money lose its value, get a rental, build up some passive income, watch the debt erode away, and then have a freehold home and a freehold rental property that's delivering to you passive income. But all of a sudden, when those capital gains dried up and when the tax rules started going against property, I think it's brought us to a turning point where people are looking at it going, is that the asset class that I want to be a part of, or is there something else that I can do to build wealth in New Zealand? And the answer, of course, is yes, just like it always has been, sitting there staring us right in the face. Business. Now, of course, business can be risky, and that's where the reward comes from. It's very different from a simple and tried and true path of education, job, income, more debt, rental property. Choosing business forces you every year to deal with the economic climate. It forces you to add more value than what you're taking. You have to make sure that you're keeping your clients and your customers happy, otherwise they won't pay the invoices. You're exposed to risk of people not paying you. You're exposed to cost increases. You're exposed to so much more than you will ever realize, but you are forced to go on a self-development journey. And recently, I've been working with a business owner who's been selling down their rentals to go further into the business journey because they can see that the effort that they put in can be matched by the income and the reward that they get back. Whereas in property, it was capped by rental increases, and they are not really in control of those because eventually the customer or the tenant will go and find somewhere else to rent. So they've decided to sell down some of these rentals and put that capital or money, i.e. the resource, to better use by buying businesses where they can increase the value of those businesses and therefore build an asset that generates them not only more income, but an asset that they could sell tax-free for now, because we don't have a capital gains tax in business at present. Now, with the scene set, let's look at some of the realizations that people are having. Now, when there's no capital growth in property, property doesn't feel as easy. So then the whole thing breaks where you can't just keep leveraging and going and getting the next one and then the next one and rinse and repeating the cycle that you can come to learn. And I'm not saying that it can't be done or that you shouldn't do it. I'm just saying that we're noticing more and more people look at business as a different alternative. I think part of this is because that capital growth is not there, so it will be interesting to see what happens should that return. However, even at the operating level of that property, they're finding they have rent in and then costs going out. What's happened to those costs? They've gone up massively. Interest costs and also rate costs, repair costs. One big repair in your rental property could be enough to wipe out the profit of that, and then you are running at a loss or potentially having to top it up. So that means you have to generate a good income outside of the property to be able to top it up to ensure that it breaks even from a cash flow position, because the bills are still going to be paid somehow in some way. But for many decades, people have said, oh, she'll be right, don't worry about it. You make it all back when you finally sell it tax-free and get the capital gain. Again, when those aren't there, it makes it harder to make that argument. So many people aren't in control of their income enough to be able to weather the storm of the operating costs of a property getting more expensive and the profit getting leaner. So it puts a lot of stress on them. So what does that do? Well, it forces them to re-explore if property is for them. And some of these people are even selling their rental properties because it's not giving them the return or the easiness of return that they had come to expect or were taught may be there. Now back to business, excuse the pun. And when things get tricky at an operating level in your business, you, the business owner, have to explore ways to improve it. So you've got to go out there and you've got to fix your margins and you've got to find people that are willing to buy your product or service, and they won't do it unless there's enough value in it for them. But you're actually in control of all of those things. So you can build up yourself, you can build up the processes, you can build up the marketing, you can build up the branding, and you can build up the systems that the business runs on as well as the team. And that will allow you to be more in control of the revenue, and then you pay your costs and then you have your profit. So we see this time and time again where business owners get better at business and then somehow magically Of course, it's not really magic, it's them getting better. They're able to improve their profit. But for a lot of people, they don't believe that that's possible, so they quit. So then you're actually competing with less people in New Zealand because a lot of people won't pick this path, which gives you, if you do choose it, a strategic advantage because instantly you're more in the fight and ready to rumble, and a lot of people just simply won't do the work. So again, it's not for everyone. Whereas property, you could argue that anybody could get on the ladder, which is becoming increasingly harder to do, and therefore go down that path. Whereas in business, it's a lot harder. So of course, property can be seen as more passive, but also more powerless at times as well, because you're less in control of it. In business, you've got to be in control. And that's what stops people from wanting to do it, because they know deep down that they don't actually want to be in control, take the risk or the responsibility. But more people are coming to the realization that maybe they've got what it takes, and maybe they're no different to other people that are having a crack about it, and maybe they just haven't learned about it. And if they do put that time into learning, then it could be for them as well. Now, being an accountant, I have to get this a little bit taxing for a moment, but you have to look at the trend for property, and it's all against property when it comes to tax rules. We've removed the ability to depreciate buildings. We've removed the ability to use a loss from a rental property to offset your personal income and therefore get a refund that you would use to, quote, repair the business, which actually you were using to improve the business and then sell the improved business at a higher rate and not pay any tax on that capital gain. Now, for a period, we also removed the ability to claim interest costs, and maybe that returns. We've also introduced ways that if you're selling properties fast enough, you may need to pay tax on that. We have a proposed capital gains tax to extend that even further. The trend for tax and property is going the wrong way. Now, conversely, in business, you've got something where if you sell it for a profit, there's still no capital gain. Now, also, you can claim expenses in the business. So you might do some things that sit in the gray area of whether they are business or personal, and you can make a case that they are business, and you may be able to claim those as an expense. You have your sales less your expenses, and then you pay tax on the profit. Now, a lot of people believe that there's these magic ways to pay way less tax with a company and a trust and things, but trust us, once you get profitable enough, you can't really avoid that 39% tax rate. But just know that there are many costs that will be part of your ordinary life that you can claim as business costs as well, if structured correctly and if legitimate and if helping you grow your revenue, that will allow you to effectively subsidize some of the costs in your life because you're paying for them with pre-tax income rather than post-tax income. To illustrate with a simple example, if you're running a business and you are buying a self-help book to help you learn how to run business better, there's a high chance you can claim that as a tax-deductible expense, whereas when you're an employee, it would be very hard for you to claim that as an expense because you can't claim expenses as an employee. So business does and continues to have the superior tax rules. Of course, you need to work with an accountant to understand your specific circumstances before claiming anything. Now, another big piece to this is that business can deliver to you freedom and lifestyle. With property, it is often, okay, I need to protect my income and then go and get more income to get more debt and keep repeating the cycle. With business, a lot of people are trying to build a business that will deliver to them the lifestyle that they want so that they don't need to be stuck on the hamster wheel of employment or repaying all of that debt. Of course, you can still fall into that trap when you are running a business, but many people are learning how they could live and work from anywhere and deliver income to a level that exceeds employment if they can add enough value into the marketplace. And they're also learning with this crazy thing called the internet that the marketplace is not just New Zealand anymore, it is international. And so then you've got people that are moving around different parts of the world selling internationally, but they would still class themselves as a New Zealand citizen or may come back here. These things are very doable and are happening. It can be very hard to understand this if we don't see other Kiwi people doing it. This morning, for instance, I was learning from an American solo mother who was earning $800,000 per month selling on the internet. That's very hard for us to understand that someone could be doing $1.5 million New Zealand selling products online every single month. But for America, it's probably easier for them to understand. But there's no reason that we can't be learning this and doing these things as well. It takes time and you've got to go on the journey. But that simple, easy path has been there for so long. Job, income, leverage, debt, property, another one, repeat the cycle. But maybe, just maybe, it has finally been broken and people are exploring other options to build their wealth. Now, something really important in this too is that there are a lot of baby boomer business owners who are retiring and they're going to be getting out of their businesses. Who's going to buy those? So you don't just have to start a business from scratch. There is an ability in this country to buy established businesses and go in and improve them. And back to my example from earlier on, that is exactly what this client is doing. They've exited rental properties and they're buying businesses where the business owner has reached their ceiling, got them fatigued with it, and they're coming in and going, oh, look at these opportunities where I can increase the income, where I can add more value, where I could be open longer. And that's exactly what they're doing. They're improving the income, therefore the profit, and therefore the value of that business. So if anything, they're getting that business discounted because the current business owner isn't willing to do that work. There's opportunity everywhere, and we have one of the oldest sets of business owners in the world that are currently running our businesses. They are risk off, they don't export, they don't innovate, they don't introduce technology, and they're not geared for growth because that's not what they want to do. They are starting to think about exiting and getting out of that. So this is a headwind for the entire New Zealand economy, but it's also an opportunity for a lot of people who may want to buy into a business. This will be a wave that we will see play out massively in the coming years and decades in New Zealand as these business owners exit. Now, into the more sexy stuff and what younger people are more interested in if they don't want to buy an established business, let's think about it. We now live in a creator economy, a digital economy, a global workplace, and an AI workplace. And solo businesses are becoming very, very doable and also very popular, where you can grow your consulting level or your distribution or your service level and have minimal costs. You might even do cost arbitrage and go and work in a cheaper country to do that. More and more people are learning about it. And it's been going on for years, if not decades, but people are finally and slowly waking up to this. So there is so much opportunity for these people to be able to play in this space. Of course, the winners in this space will be those who move fast, those who build audience, those who build distribution, those who understand their numbers, and those who can add the most value in a crowded marketplace where they will need to learn how to stand out and deliver more than their competitors can. So if you're interested in running business, the first thing you have to do is understand that everyone's going to tell you businesses fail. Oh, it's really risky. Not everyone can run a business. That should be your indication to go, okay, good. That's the mindset I'm competing with. Those are the people who aren't going to do it. It's not going to be them. And partly they are right. There is bad data for running business because of course it's risky, because it's hard. And what do people not want to do? Things that are hard. And if you stop learning in business, you increase your likelihood that you will fail. So you have to be good at this and you have to get good at it. But a lot of Kiwi people in this country play rugby, but we don't say to them, not everyone can be an All Black or not everyone's going to be in the Super 15, because we just know that that's the reality of it. So just like any other sport, you will have to be really good at it to get exceptional reward. So it comes down to whether you're willing to put in the work or not. And a lot of people aren't. And so that's why they'll quote these stats to find reason why they couldn't do it. That's fine for them. That's not you. But it doesn't mean that you can't have a crack. So no, property isn't dead, and no, people won't stop investing into it. We will still see that. But the era where people go around talking about it like it's this easy win and it's the best asset class, I think people are waking up to the fact that that may not be true. But personally, I do believe that business is the key way to build wealth. And it is something that more people could be doing. They just haven't learned that that could be the path that they are on. You can get in control of income. You can get in control of your personal development. You can get in control of how you live your life. And you can get in control of more of your taxes to then improve tax deductibility in a country where it is very expensive to live based on the costs that you will have in your life. So the tax rules are in our favor, and the fact that many people aren't willing to do this is also in our favor. But again, of course, it's going to be hard, and of course, you're going to have to learn a whole heap of new things and become somebody that you're not currently. But what would you rather want? A 6% gross yield on a property, or would you want a business that can deliver to you a good income, a good way of life, a good way of learning, and building an asset that's increasing in value that you can sell tax-free, because we don't have capital gains on businesses just yet? Are they coming?